Hello, everyone, and welcome on this webinar entitled From Wall Street to Blockchain, a Career Transition Guide. This webinar is co-organized by the Paris Blockchain Society and the DEC Institute. The Paris Blockchain Society is a French-based association that helps young professionals working in the blockchain and digital asset industry have a successful career start through conferences, webinars, master classes, and mentorship. And we are really happy today to welcome three speakers to discuss how to transition from a traditional finance job and background to a career in the digital asset and blockchain industry. Why are we organizing this webinar? Well, in the past years and weeks, we have seen a lot of an increasing intersection between the world of digital assets and blockchain. Very recently, you have probably seen the news of BlackRock announcing that tokenization is the future of finance. JP Morgan has its own blockchain platform called Onyx. Very recently, the Citibank has announced the creation of its own blockchain. So we are observing this increasing intersections, and be it finance students or senior professionals working in the TradFi industry, you might want to be trained on this kind of topic and even consider a career in this field. So today we are really happy to welcome three experienced professionals that are going to share their feedbacks with you on their career. So Emma Lovett, you are executive director in charge of DLTs at JP Morgan. Welcome.
Thank you.
Jamie Kershid, you also have a traditional finance background, especially at Credit Suisse and at Goldman Sachs, and you're the founder of the first European spot Bitcoin ETF. And Eric Vrage, you also were at JP Morgan, and today you are executive vice president of the Algorand Foundation, a leading blockchain company. So to start with, I know that we have a very diverse audience. Some of them are people that are just discovering the blockchain industry. Some of them are more senior. But to start with, I suggest we start with a few definitions of what is blockchains, what are digital assets, and what can they bring to the finance industry. Emma, would you like to start with this explanation?
To kick it off, well, we'll probably all slightly differ here. So I guess when I think about how to use a blockchain, and then layering on top what is a digital asset. So my interpretation about what a digital asset is a security that uses blockchain technology for sort of the majority of the life cycle of that security. So not necessarily all of it. We've seen some examples in the market that have got sort of a dual type aspect to them, whereby they use blockchain for part of it and then it moves over into traditional infrastructure. I think that the term digital is very, very broad. So, for example, I work in digital markets at JP Morgan, and that's not just looking at blockchain products. That's sort of just looking at the advancement of technology. However, when I think it's sort of, as you can apply it specifically to digital assets, I think that is when my interpretation is that there would be some kind of DLT or blockchain usage in that asset.
Amazing. Eric, maybe you want to complement this definition?
I think Emma did an excellent job. I mean, the way that I think about it is like blockchain. It's a database, so it's like you have a Google Sheets or something like that anybody can go and read right to it, but it has certain properties that mean that if we have a spreadsheet between the four of us and we say like how many goats do we each own or something like that. I can't just go in there and write a big number beside my name and own those goats. So there's a control to it, so that you can't double spend the same asset. You can't have two people saying they own the same thing, and that's kind of the property of a spreadsheet. So it's kind of like just a big Google sheet that has controls on who and how those numbers can be changed. So I think that's kind of point one. Then what's a digital asset? I would say, well, it's just a representation or a value that's held digitally. So if we think about even just normal bank accounts, forget about blockchain, the vast majority of money that people feel like they own today, they log into an app, they see a number. Well, that's a digital number. Do you see what I mean? And they would say, well, I have 500 euros in my account. I have a digital asset for 500 euros. That's kind of the same. So that's the way that I think these two things are connected.
Thank you. And Jamie, maybe could you tell us a little bit more what this kind of technology, blockchain, digital asset, can bring to finance? Why are big financial institutions getting more and more involved in this kind of technology? What does it change?
Yeah, this is an interesting, very interesting point, because, and I've said this a number of times, but blockchain is a technology, and a lot of the noise that comes around from the regulators is kind of misdirected, because you should never regulate a technology. You should regulate the processes, the behavior, all of everything that is using that technology. And we've seen over the past 15 years since blockchain turned up, it is a priority for banks to start looking into new technologies. And that's just the same as when the internet turned up. This is, some people may have heard of this as Web 3, Web 2, Web 3. What we mean is there is a shift in the ability and to use the technology that's available to do what we have always done, but in a more efficient, seamless, immutable, meaning it cannot be changed, in a way that is transparent. And the problem that I think the banks, or not even the banks, but the blockchain businesses faced, was when using words like trustless. As soon as you say that something's trustless, you don't need to trust anyone for this, as Eric very nicely explained. You don't need to trust everyone is doing their job properly. That suddenly makes regulators get very upset and very scared, and they start sort of focusing on the wrong part. If we think about what this can do for finances, well, let's look at everything in finance. Let's look at everything in logistics. Let's look at everything in provenance. The blockchain has many uses, and the technology can improve whatever existing process happens with the old technology. So within finance, there are a number of applications where this technology can be used. And again, I've just touched on a couple of them, but very simply, people may have seen a company called Ripple moving into the payment space. Ripple has its own digital asset, and it's using that digital asset as a mechanism by which it can transfer a value from point A to point B. And now, just as Eric explained as well, if you see a number in your bank account, you don't really know if that's a digital asset or if it's just a representation of a number on a screen. You're not seeing the physical underlying cash because it's sitting in on a ledger somewhere in a banking system. So really, this whole blockchain in finance it's kind of the only, in my mind, and it's my opinion, it is the future. It has to go this way. It's like going to a phone directory in an old paper book to find a business. Why would you do that? You just go to, and I'm not going to use their name, but you go to a search engine, but immediately, as I said that, you think of the name that I'm not going to promote, being that's become a verb, So I believe personally that blockchain will become as important in finance as it is in any other industry or application of the technology.
Thank you. So yeah, it's a technology that improve the existing financial system, making it more efficient, quicker, cheaper sometimes, depending on the use cases. So I think now everyone have a pretty clear understanding of what is blockchain and what it can bring to finance. So in light of this, could you maybe please introduce yourself in more details, come back on your background, your current job in the digital asset, so everyone in the audience can have a concrete example and understanding of what it can be to work in the industry. Emma, would you like to to start?
I can kick it off. So my name's Emma Lovett. Hello. I work at JP Morgan, and as Patrick said, I work in our markets DLT function. Prior to that, I was still at JP Morgan, and I worked at on the fixed income syndicate desk for almost 20 years. And so my background is really quite in depth in terms of the issuance of fixed income products. It's something that I've done for a really, really long time. And what I was really attracted to was just a little bit about what Jamie was saying about how, you know, my personal opinion is that this is coming. And I was quite excited to become part of the beginning of that journey. I sort of straddled quite a lot of technological advances in syndicate, you know, bearing in mind it used to start with sort of paper orders, and then we moved to Excel, then we moved to book builders, you know, all these kinds of things. And so for me, it was almost the evolution of that. And so it just made sense. It is quite a bit more ambitious than some of those things that I think sort of happened quite naturally, but that was sort of my thought process around it. So in some ways I'm a bit 50-50 here, because I do still work for the big traditional American investment bank, but you know, my everyday focus is on the advancement of blockchain technology within the financial markets.
Thank you very much. Jamie, maybe you want to say a few words and maybe explain what is the spot Bitcoin ETF?
Sure. I mean, actually, I just think Emma's. I love Emma's description there, because this is an evolution, and you know, for those of you who are unfortunately as old as I am, you know, we moved from voice markets to electronic markets, and it is a big shift, and it takes time, but it is definitely coming. So you can quote me on that. Myself personally, I was working in Credit Suisse on Wall Street, well, Midtown New York, back in the late 90s. I spent 20 odd years in Credit Suisse, Goldman Sachs, and I helped with the bailout of the Bank of Scotland, Royal Bank of Scotland in London, post 2008 crisis, rebuilding the bank and shareholder confidence to purchase back the shares that the government bought. So I spent a lot of time within banking. I ran algorithmic trading at Goldman on the technology side, and so I've been very much on the technology side. And just as Emma's described nicely, the technology is the most important part of these banking infrastructures. You know, whilst at Credit Suisse, we were able to quantify the value of a millisecond for an order to reach an exchange. And I think we've had probably the fastest exchange connectivity between the institution and our co-located servers. And we're looking at not small numbers. Like every millisecond is something like, you know, $100 million in terms of value that's lost if you're 1 millisecond behind the next person at the market. So I've always been very much excited by the technology that supports the business and actually drives the business revenues. But I also had a hat on, which was the regulatory side, and I ran new business for Credit Suisse in London. And we launched after the introduction of regulation after 2007, 2008. It was called MiFID. There was MiFID 1. It was only called MiFID 1 now because MiFID 2 came in later. But MiFID back in the day was all around transparency, because obviously these banks were too big to fail, and you hear all these things. And again, it was the technology that the regulators were worried about. It was the technology that was making things faster. And you know, you had Knight Capital that, using algorithms, went bankrupt within 90 seconds because that algorithm goes haywire, and then suddenly they've lost their entire balance sheet. So I've also had this regulatory angle and with my technology angle, all within this investment banking circle. And naturally, when I left investment banking, and I ran another business, a Swedish business, which was fun, and I sold that to NASDAQ. And then it was very obvious that technology, blockchain, regulators are all over this because they're scared of it and they don't understand it, and it's going too fast, and it's going to just be, you know, it's just a nightmare for them to keep up. and lack of knowledge, because obviously people that work in regulators usually come from banks, but by the time they've come from a bank, the technology is advanced. And it's like when you buy an iPhone, every minute I look at an iPhone, there's a new version out. So, there was a very natural move for me to decide to move away from the banking infrastructure and safety, I would say, and actually look at how we could help the technology, help the regulation, and move towards bridging this digital asset world with the traditional finance world. And really what you just described in the spot ETF, this Bitcoin ETF, that I believe is the first real sort of turning point. That's the tipping point, because now we have a digital asset that is only available on unregulated exchanges, which may or may not disappear overnight, depending on which jurisdiction you're in or which country you're talking about or which person's in charge of it. And if you're talking about unregulated exchanges, no one can invest in that, not from an institutional angle. An institution, I'm probably waffling too much, but there's a pension fund that invested in a company called FTX, and if you think about FTX existed for 6 years, and a pension fund has a long-term strategy, and yet it was investing some of its assets, which are long-term strategy, into a new startup in a new technology, and suddenly it all disappeared. That's an enormous failure. And so what we've done is we've tried to take digital assets and successfully now, with regulator approval, brought them into a regulated market so that institutional investors can buy Bitcoin on a traditional exchange using traditional infrastructure and have it on their balance sheet. And so for us, we're very humble, very grateful that the regulator agreed that we were the right people to do it. And of course, now everyone who's looking at blockchain will see Bitcoin, will see the SEC's going to follow suit fairly soon, we hope.
Yeah, I think indeed we are very at a turning point in the digital asset industry and the involvement of the implication in this sector. And I think actors like you are contributing to this. Eric, I think you have a very complementary point of view, because you worked at JP Morgan as well, but you have decided to join a crypto company. Could you explain a little bit your background, your choice, and maybe what is Algorand for those who are not familiar yet with the company?
Yeah, sure. Thank you, Patrick. So my background, I mean, it's a little bit funny. I mean, I'm from Canada originally. When I finished high school, I went into development work in Indonesia, and then I went to university, and then I was like, I had an opportunity while I was in university to work in banking, and I thought, finance is really great, but maybe I want to do development work. So then I went to Africa, and then I ended up sort of getting in through the back door 20 something years ago at JP Morgan. And there's a little funny story to do with that too, and technology change and so on. But, people wouldn't believe it in this day and age, but the area I was working in equity derivatives, and they had to send out sort of valuations and pull together data, value a bunch of portfolios, send off the valuations to clients every day. And so my super terrible job back then was taking these valuations off the printing machine from the computer and finding out the fax number of the client who was supposed to receive it, and then typing in the phone number of the client and then sending it through the fax machine, and then you get a receipt, and then you staple the receipt to the client valuation so you can prove you sent it if ever the client comes back and says, I didn't know that I was, what my position was. And so that was obviously like a super boring, super job that, thank God, has been automated many, many years ago. But, to illustrate kind of this systems change and how it works, there was, a consultant came in, they kind of revised the whole process, automated it, advised on that stuff, which makes sense. They actually found out when they were reviewing, because they go around to everybody, they say, what's your job? What's the workflow? How does it? And they actually found somebody there, and her job had been going on a Bloomberg terminal or a telex machine or something like this, and getting prices and putting them into the computer system that was then used to generate these client valuations. They actually found out when they did that 2 years prior, they'd already been automatically downloading the data. So basically, she was doing something that was completely useless. The information was already there, and it was like a wire in the wall that goes nowhere. So I guess, the reason why I say that, and it wasn't just that, but there's many, many instances over the year that you see technology moving along, you see systems change, you see processes change. you know, my background, most of my time at JP was working on structured finance type things, you know, complicated securitizations. Like Jamie, during the financial crisis, I spent many years working on a lot of the bank bailouts and the European sovereign debt crisis and things like this. And time again, you would see these systems where kind of things are connected in ways that you look at it and you go, it's kind of weird. Like things shouldn't work that way. The payment system is an obvious example that Jamie raised before, but there's loads and loads of other examples like that. And I think that was the sort of the opportunity for blockchain. That's why I became interested. That's why I stepped into it as a career. And I would say, you know, a little bit about Algorand, or why I chose that as the place to be. It's a layer one blockchain. So, you know, people who research this stuff, they know that, you know, there's Bitcoin, and Bitcoin kind of doesn't do very much, but people say it's digital gold, whether you believe that or not. Then you have Ethereum, which comes along and they go, okay, we can do smart contracts. But if you look at Ethereum, they can kind of, you know, it's 15 transactions a second. It's kind of slow. It's kind of expensive. And then you have a lot of people kind of building on top of that and saying, well, we can make it go a bit faster and so on. I guess I was pretty technology agnostic. So I'm not like a big kind of coin meme guy spending time on Twitter and you know, like it's going to go to that's not really my thing. But I wanted to join somewhere where the technology was just very performant, so that whatever blockchains get used for in the future, I wanted to work at a place where the technology has high throughput, it's cheap to use, it has a history of not going down on a regular basis, these types of basic things. And I think, you know, for me personally, it's been a huge career change, huge cultural change, lots of different things. But the thing that's super great, I guess, about my position now in business development is I get to see all the different things that people are doing with blockchain. So of course, you know, I'll go and have a meeting with Emma and her colleagues and see what's going on in the kind of traditional finance space, how processes can be made more efficient. But then right after that, I might have a meeting with somebody who's got some NFT art that they're selling in a gallery type thing. And then I'll have something with somebody who's doing supply chains in Africa, or I'll have somebody who's trying to do payments for the United Nations in places where traditional banks don't want to provide payments or provide them very badly. And so there's this, you know, there's a myriad of use cases. And the great thing is, you know, with Algorand, there's a technology that's fit for purpose. And, you know, I get to see all the different people that are doing things with it.
And I think, Eric, you raise a good point there, which is that, you know, I think we've all just introduced a slightly different part of, you know, we're all using different platforms. JP Morgan, like you mentioned in the intro, Patrick, is very focused on its privately permissioned blockchain platform on its digital assets. But obviously there's public chains, you know, the use of crypto. When you're talking about digital assets, I would see them sort of including all those things, but they are all quite different in and of themselves. Like we haven't yet reached a standardization that maybe will never happen. But, you know, I think there's quite an important distinction to make, that, you know, a digital asset isn't necessarily an asset on public blockchain using some kind of crypto payment. It could be far more subtle than that.
Yeah, I think it's a super point, Emma, and the way that I think about things too. Like one of the big advantages that rarely gets talked about is this idea of people just being able to come and build something with the technology. Like if you think about the normal way the world works, I don't know, say you want to interact with Deutsche Bank. Well, then probably you need to know somebody there. You go and see them. You'll maybe discuss what it is you want to do. You might then sign an NDA. You might then prepare some contracts. You'll sign the contracts. If both of you agree, then you can move forward and start doing things together. It's a completely different model than permissionless blockchains, and not just permissionless blockchains, but something like Linux, you know, or open source software, that type of thing. Like people can just start building things on top of it. You know, all the people who are building stuff on Algorand, like I don't even know who 80% or 70% of these people are, and I wish them well. And it's sort of like Wikipedia, you know, where you have this great commons and people are building something wonderful with it. And I think that that's kind of a real advantage as well, because a lot of the times when we talk about efficiencies with blockchain, we're kind of we're talking about rolling back the fact that over the years we've kind of built layer upon layer upon layer of different things, and each one of those layers needs to have contracts and lawyers and people dealing with each other. But there's not really a way to kind of easy way to disentangle that. And so some of the most interesting things, I think, are people who are just starting brand new things, whether it's selling art or supply, like whatever, but they're just kind of building that from the ground up, a completely separate process.
Yeah.
I just want to add one thing, because what Emma and Eric said just then,
Sure.
it blows it up. It wide open. It is exactly right. There is so much. There are so many different facets of this that it's very hard to just sort of have it all in one sort of session. But exactly as Eric just described, I was working with a business that with HSBC in Singapore, and they just funny story that we were looking at blockchain for logistics, and this is HSBC. They do a lot of logistics work with shipping into Singapore as a primary port, and I asked them what the real problem was. What are they trying to solve? Of course, there's a great new technology and you can do anything with it, pretty much. But what are you actually trying to solve? Anyway, so I went into HSBC's headquarters in Singapore, and there were 2 floors. These are not cheap buildings, and there's not cheap floor space. And there were 2 floors where you could not physically walk into the floor because it was boxes and boxes of paperwork that was just mindless amount of paperwork that was just sitting there. And if anyone, a regulator or a client, wanted to go back and see what happened, why it happened, when did it happen, it's just impossible. And so I think that exactly as Eric's describing this, there's just so much value in this whole technology, but it just needs to be, you need to understand why you're doing it and what the real use case is. But the beauty of it is that you can do it from anywhere. That's one of the, we've all been through COVID, we've all worked from home, and yes, we managed to all work and keep businesses going. But, blockchain has got so much value that it can bring to people that don't work in the primary markets and in the centers. And then we've just started a program with a lady in Bangladesh who's trained 10,000 young women in blockchain coding. And 7,000 of them have now got financial freedom and jobs, checking code in from a dongle on their laptop twice a day, check it in and check out the code in the morning and check it back in at night. And they've just managed to retain jobs. And this is opening up the whole world of opportunity for those markets that don't necessarily have access through the traditional old paper process trails where you have to be there in person. So yeah, I'm sorry, I went on a little bit, but I just wanted to add to that.
Yeah, no, thank you for that. Very interesting. And I think we are starting to highlight like the main characteristics and also the key differences between the traditional finance world and this new world that is emerging. And this leads me to my next questions for people that would have understood that blockchain is the next evolution of finance, and it's going to bring a lot of innovation, efficiency, and they want to work in this industry. What are the key differences, be they cultural, like any big differences in this new industry that they should expect to meet before doing this transition, and especially if they want to join a crypto company? And maybe Eric, you can share your feedback on this.
I mean, look, it's a super big and interesting space. It's also highly volatile, right? Like if somebody goes to work for an internet company in 1999, like they should expect a pretty wild ride. So, I mean, I could compare and contrast lots of things, but I think the expectation is whatever happens, that somebody's going to learn an absolute ton in an area where there's not that many people are really familiar with how it works, and it's just going to be a different journey. I mean, it's lots of young, very smart, enthusiastic people. The downside is that you maybe shouldn't expect to get a steady paycheck.
Yeah, it's and what does it imply in terms of careers, for instance? And yeah, how do you build your career and your future in this space? What are the main differences?
I think the career, I mean, look, there's lots of people, I would say you know, there's people who have kind of jobs, if I can put it that way, in the space. You know, they're working for a company that is building on using blockchain crypto in some kind of a way. And that's a pretty traditional thing in a very dynamic industry. There's way more people who are getting together where they go, I've got a business idea, or I know how to code things really well, or they're kind of establishing these small teams that may or may not even be set up as a company, and they're just building stuff and going for it, right? And that's kind of the big part of it. Now, like, how do you get into that? Well, you don't kind of write a fancy CV and send it off to the HR department. Probably the way that most people get involved in that is they start tuning into things like this. They go to meetups. Maybe they weasel their way into a conference somewhere. They talk to people. They reach out on LinkedIn. They read stuff on YouTube. They comment. They DM somebody. Like, that's the way that I think probably, if we were to count like everybody in the world who's involved in this movement, I'm going to guess 70-80% of them got involved in that sort of a way.
Yeah. And Emma, so you are still working in a traditional bank, but I guess you are interacting very regularly with blockchain companies and actors. Are there key differences that you can observe, and that you think like people that would want to make this transition should be aware of, maybe in terms of mindset or in terms of ethos? You know, there is this fundamentally decentralization ethos at the beginning of the movement. Is something that you feel in your interactions?
Yeah, I think one of the biggest things is fresh eyes, you know, and it's tackling a problem in a different way. I personally see it very much as a partnership. You know, I think that, you know, the three of us have got sort of a lot of experience in banking, and were at the forefront when sort of things really started to crumble in 2007, 2008. And since then, it's been quite difficult for banks to regain a lot of the trust and the reputation. However, they are developing in this space. So I see it very much as a partnership. You know, banks are making progress with the blockchain. A lot of the use cases are sort of like going to sit within these heavily regulated markets. So you do need part of the fin to sort of say, you sort of need to do it like that because of these reasons. But equally, having fresh ideas, somebody that doesn't come with all that baggage from, you know, just sort of looking at things with a different approach. I think that's key. And that's part of the excitement of this whole sector, is that it's not just being driven by the banks or by, you know, asset managers. It's very much being driven by lots of different counterparties, some of which are completely new startups. So, you know, I think that that's going to be part of the success in a way.
Yeah. Jamie,
I was itching to add to Emma's comment, because it's perfect. It's exactly right, because if you take a very high level view, you know, crypto, blockchain, NFTs, everything Eric described about, you know, it's seen as a very casual, less formal, more fun, fast moving kind of environment to work in, and you know, in most situations it is. But of course, as Emma just described, you could do all of that, but without the structure, the infrastructure, the you know, the ethos and of the financial markets and the capital markets, sometimes it can just not be aligned properly. And there is and whilst people are joining this conference, this webinar, to decide whether they want to go down banking, traditional finance, or down blockchain and fun and have fun with Eric, you know, there is also a middle ground, you know, and you can, exactly as Emma's sort of demonstrating here perfectly, is that there is a lot of value in the technology still within financial infrastructure. So if you want to go to work in flip-flops and shorts and, then maybe you don't want to go to a bank. Whereas if you want to, but if you like the security and safety of a very stable, well, usually stable organization with a career path that can sort of go in many directions within the same organization, then, maybe the traditional finance is good, but exactly as Emma's done, you choose the exciting, sexy technology to go with it. So there's just so many options and variables. And I just think that the biggest differentiator is the speed at these things happen. Eric, I'm sure, will tell you that, like you said, there's many people developing many things all the time on Algorand, because I hear it's one of the best layer ones out there. But just, if you try and take that mentality into a bank, banks are slow, and they're slow because they manage risk and they manage their reputation. And, people ask, why are banks not buying Bitcoin? And while some of them might be, they're not openly saying they are, because Bitcoin is a tiny part of the financial ecosystem. In terms of value, fixed income markets dwarf it. And so whilst your banks are making their reputation and money from the traditional asset classes, this very exciting new asset class, the first one in 50 years, to turn up, it's just too risky for banks to just jump in as quickly as retail individuals or blockchain companies. So there is a mix, and it depends on exactly what your own personality is like. Do you like the safety? Do you like the excitement? Do you like the risk? There's a lot of variables on this.
So yeah, we understand that it's a very diverse, fast-moving industry with a lot of opportunities, and that you can find something very, very corporate or something very, very casual. So it's very exciting. But what about people, especially people who have a finance background? What kind of job they could expect to get in this industry, be it like in traditional finance, working on digital assets, or in crypto companies? What type of opportunities do exist for finance background?
I'll just jump in. But when we talk about blockchain companies, there's not that many exciting people like Eric doing the development and doing their business development and doing. In my company, we have a finance director, and they just do traditional, normal finance. It doesn't matter if it's a Bitcoin ETF in the background or anything. It's just operating a company. So if you've got a financial background, there's the same jobs in finance are in blockchain companies. There's every organization has your chief marketing officer, has your business development team, your sales team, selling something from a financial instrument. Does it really matter if it's Bitcoin or if it's a structured fund? Or in the end, of course, if as long as you understand what you're selling, it's the same process. It's the same sort of sequence, maybe faster paced. But I think for anyone who's in finance and is interested in blockchain, they do have almost every single role that you'd find in a financial organization is available in a blockchain organization. And maybe I'm wrong, but I think that there's just a plethora of roles out there for people in finance to move into blockchain companies and either work in the traditional role or move into the more exciting development role or whatever it might be.
I also think that we're still at a stage in this journey whereby having the tether between the blockchain world and the financial world is a really useful tool, because I think that on this particular call we're all preaching to the converted, but I spend a lot of time with people that some are curious, but some are quite suspicious. And so being able to speak to people knowing sort of where they might be coming from, and that's probably from some kind of financial background, is really, really useful at this stage, just because we're all sort of having similar conversations around what this technology can do, why people should be excited about it. And so having some experience of both of those things, I think is a really, really useful thing at this stage of the journey.
When you're talking about people being suspicious, I think it highlights something very interesting about the mindset of one part of the industry. Could you maybe elaborate a little bit on this?
I don't know if it's just the industry or just the general public. I mean,
Yeah.
you read the press, you read, that there's as much skepticism as there is excitement, I guess.
Yeah, 100%. But a lot of that is because there's this lack of knowledge between what blockchain is and what potentially Bitcoin is. And if you Google Bitcoin, all you see is FOMO, this fear of missing out. You see pictures of kids with Lamborghinis, on Instagram. That is not blockchain. That is, and that's what I believe, because of the way where this came from and what its first use cases were. It's created that skepticism that Emma described. It does take people from finance to understand it, move into it, legitimize it, change the narrative from Lamborghini Bitcoin weed sellers from 2010 to actually this is a fantastic technology and it should be used in logistics, provenance, supply chains, payments, ledgers, settlements. There's so much use for it that I think that the tipping point has actually, it's taken a while to get here, but that's because the Bitcoin story has overruled it pretty much for the last 10 years.
Also, it might be interesting to focus on one type of company or protocols actually, and to talk about decentralized finance, because this is today one of the biggest use cases of blockchain. One of the use cases that drive most of the on-chain trading volume. And this is also maybe one of the natural career paths for people, or at least interest for people having a background in finance and discovering decentralized finance and understanding how blockchain can change everything in the way the finance works today. So maybe Eric, would you like to try to describe and explain what is decentralized finance, what is a protocol, and maybe if it is possible for what kind of career is it possible to make in this type of in that direction?
So maybe if I describe, decentralized finance or DeFi, smart people interacting with each other via smart contracts and not calling up a trading desk and the trader says, yes, I'll buy it, or yes, I'll sell it to you. Or so it's purely smart contract. And I think, as a hardcore finance geek myself, the two things that I found most interesting, I think a lot of these things that kind of happen in crypto blockchain lands, there's almost always something that's exactly the same, like an analogy for it in traditional finance, including the SBFs and the blow-ups and the frauds and like all of that stuff. It's not like it's new, it's all been seen before. Yeah, that's my kind of first point. The things that I think are very interesting, or the things that I found anyways, is flash loans. Maybe not everybody knows what they are, but I think that that's a really, really interesting idea when you try to, I'm not sure that there's anything, I don't think there's anything equivalent to it in traditional finance. And so people understand that the idea there is that you can lend an asset, and the loan will only occur if it's 100% certain that the asset comes back to you, if that makes sense. So it's not about collateralization or anything, but it's actually within the same block of the chain. As new blocks are being added, the borrowing and the repayment need to happen within the same block. So i.e., if you weren't going to get back the asset, then you wouldn't have lent it in the first place. And people, can put pools of assets there that are available to provide these kinds of loans. What they do is they provide liquidity to the system because they allow certain trades to happen that wouldn't otherwise be able to happen. So I think that's like a very, very fascinating new innovation. The other one is these AMMs, right? Where there's no trader there. There's just a mathematical construct that says that if you want to sell something into the pool, then here's your price. If you want to buy something from the pool, here's your price. And then there'll be a certain amount of kind of slippage or cost associated with doing that. So both those things are cool. The DeFi market got very, very big. I think overall, kind of globally, it's come down in terms of size, and really a lot of the focus there it feels like it's shifting from a market where loads of trading activity, loads of borrowing, loads of lending, most of it though really self-referential, in that it's a way for people to finance and kind of place bets on the value of crypto tokens without going through an exchange, right? So that's kind of where it was. It feels now like it's more evolving towards what some people are calling RWAs, real world assets. The idea that actually you could go on chain and you could buy a token, and that token represents an interest in a US Treasury bond or in a house or in a something, and that you can get value from it in that way. So I think it's something that it's evolving a lot. And there's a lot of, I know Emma's teams at JP Morgan, they've done some work with kind of like putting a little toe in the water of DeFi and how it works, whether there's kind of things that can be used and so on. But it's a very fascinating area. And I think whatever happens, there's going to be some innovations there that are going to get carried over to other places.
Yeah, I'll just add one small thing, which is that the DeFi market, it could be potentially enormous. And when we always think, because we've had the luxury and privilege of being in the financial centers, if you start to look a little bit further into the emerging markets, you've got so many individuals that do not have access to the traditional lending system. They just don't have it. A lot of them don't even have a bank account, and so when you start looking at, well, how does DeFi benefit anyone? It's like, well, stop looking at New York, Tokyo, London, Paris. Let's look at Nigeria. Let's look at sub-Saharan Africa. Let's look at India, and let's look at the microfinance system, where the microfinance model is a fantastic model. I love it. But when you look at tokenizing it, and you look at creating microloans, through blockchain, people can access it on their phone. And the majority of people have a phone, even if they don't have a bank account, they have a phone. And that suddenly you've now got enormous pools of liquidity, where even though they're very small loans, but billions of people would be able to access this. And that in itself starts to get interesting for the banks, because the banks need to find alpha. And current markets are not doing very well, and traditional markets are very stable. But if you're looking for something a little bit more exciting and a little bit more with a potential revenue on it, they can start packaging up loans to be then distributed out to the unbanked, and suddenly it's a whole new world of creating access for the underprivileged and the emerging markets that we've just taken for granted within the Western centers.
Thank you very much, Jamie. Maybe we can use the 10 last minutes to give advice to people that would have been convinced by the interest of blockchain and digital asset, and would like to take it a step further and maybe get training on the topic, or work or look directly for a job. What would be your best advice for someone with a traditional finance background who would like to start working in the industry? Eric, maybe?
I think I might have mentioned before, but I think just go on the internet and try and every city in the world these days is going to have many kind of meetups and things happening and groups, and just go there. That would be my best advice. You'll learn a lot. You'll meet some people, and potentially, even if you're interested in working in the space, you'll connect with an opportunity.
Emma?
So I think I'd say two things. One of them is sort of echoes Jamie's point earlier on, which is to sort of figure out what part of the space you want to be involved in. If you're a crypto purist, or if you're, then probably traditional banking isn't going to be the right place for you. But equally, there are plenty of opportunities within a more corporate setting. And then again, it's just to think really laterally. This, in my mind, this this whole sector, when people sort of say, oh, our children will be working in jobs that don't even exist yet. Well, this is sort of one. Just approach every opportunity sort of just with a completely open mind. Work out what your risk appetite is, but it's an exciting space. And so I think, especially part finance background, the world's your oyster. There is so much out there. So, just treat every single opportunity and, as it comes, and then work out, exactly what it is you want to do within that space and just go for it.
Thank you, Jamie.
Yeah, I have this conversation quite regularly. I have children that are 21, 19, and 16, 6, and the 1-year-old doesn't ask me these questions yet. But for me, and exactly as Emma just described, there's a lot of talk of our children and our children's children working in environments that don't exist, like whether it's in the metaverse, whether it's in are our children going to be going to banks, or are they just going to put their little goggles on and sit in the office and meet with people all over the world? It's very difficult for an old dinosaur from the banking world to even guess what it's going to be like. But again, you've heard from Eric, and you've seen how he moved into this space, and see how exciting it is to be in a layer one chain. And Emma's staying within JP Morgan, but is enjoying the exciting world of this DLT within that boundary. For me, it's all about the behavior, and I think Emma touched on it. It's about the behavior and what you value in your time. And if you feel like that this blockchain is exciting, it is exactly as Emma described. It's like, what do you want to go down the traditional finance route and then move into it later once you've had that expertise within finance? Or does that hinder you because you become, like me, sort of stuck in the old ways, and you're trying to sort of bring, I'm trying to bring digital assets into traditional finance because I'm familiar with this. That's where I grew up. Whereas, a lot of people will be like going, well, we don't need the traditional finance anymore. Get rid of the old boundaries and the old barriers, and start thinking. Take the same problem, but start from a new bit of paper, and you could probably do it in a much faster, better way. And so, it is exactly, if someone came to me for advice, and my 21-year-old just did it very recently, said, I don't know what I'm going to do in my life, and it's all very individual. You need to understand what's important to you. How do you want to work? How do you want to spend your time? And if you are interested in the space and you're not feeling like you want to be 7 till 7 p.m. in a bank in the city, then yeah, maybe blockchain is the right way to go, and you might be able to find an exciting sort of path forward, just like Eric's done, and put us to shame.
Hardly. I would say, actually, if I can even thanks, JB, if I can even sort of say something for the big company, the advantages too, right? I think having been on both sides of the fence, like in a big bank, kind of the disadvantage is you try to get something done, and you're gonna pull your hair out because you're gonna be told 1,000 times no, and you're gonna keep going back, and you're gonna try and change the idea, and you want to get something meaningful done. Well, it's gonna take you 1.5 years or 2 years, and you're like, this is a waste of my time. I could have done it in a month, and we're gonna miss. All of those frustrations are there. There's a big plus though, right? And the plus is, you walk up to somebody, you want a meeting somewhere, and you've got a Credit Suisse or a JP Morgan or a Bank of America. You got something like that on your business card. You get a meeting anywhere. That's a big advantage. The second big advantage is that you go to somebody and we've got this blockchain payments product or something, and it's developed by a big name. Instantly, you're like 10 times further along the road with that client or customer than you would otherwise be. And the third thing is, just if there's a mission, or if a big organization like that puts its mind to something, it's really, really, really powerful. right? Because, you know, you speak to any kind of startup founder, they're spending a ton of time running around, trying to get money together, meeting with investors, trying to hire employees, trying to convince new employees, like, you know, this is a great opportunity, you should work for this company. The new employees are like, why don't you never heard of that company? I don't know. And it's just, there's like a lot of stuff that in a bigger organization you don't need to worry about. And if you have a great thing that you've gone through the hoops, you've spent the 2 years ticking all the boxes, it's just like you can scale at a much faster speed than you could, I think, if you're kind of going door to door. So I think those two things, it's pros and cons, but those are quite big advantages as well.
I'm pleased that came from Erica, not from me.
Now's your opportunity to disapprove, Emma.
It's a very good point. And I can't tell you the number of times when I get approached by a new project, and the first thing you do is you look at the people involved, and then the first thing you look for is their history, and you look at where they've been. And I feel like that's old behavior. You know, the talent, it doesn't. It's a shame, because it does make a big difference. Eric's absolutely right. You know, so there is a case to be made that you should do your time before you get to enjoy yourself.
Right. I think it's you're so right, though, Jamie, but I don't think that's as technologically sophisticated as we get. I don't see a day and age when we get away from that, because, you know, say in my role or the situation, you know, you're meeting people all the time. Somebody comes, well, let's partner together, or will you invest in me, or will you spend time working on this project together? Every human being is going to make an assessment in their mind to say, is this a credible person? Does this look like somebody who can execute the plan that they put in front of me? Does this look like somebody who even has a good plan? Could they pivot if the plan goes wrong? And you're going to form those judgments. And the more information that you have to do that is always going to be better. And I think that's just one of these really hard things of, you know, people kind of trust the things and the people they know, and that's it. So
yeah, well said.
Yeah,
well said.
I think that we have one question in the chat, and if other people in the audience wants to ask question, feel free to do so in the comment section. It's a technical question, so maybe more for Jamie, as it's regarding trading. I'm displaying on the screen. Actually, hello. I wanted to know your opinion on the topic of e-trading algorithms, as the significant number of transactions executed per second by the algorithm could make this type of product less profitable due to the high transaction cost. Gaz, or do you think that volatility compensates for this downside?
Yeah, actually, I think probably Eric's going to be a good person to answer, because he actually is working with a platform that reduces the cost and the time, and actually probably is fit for purpose for that kind of sort of a trading algorithm. So my algorithmic history was purely from, in fact, I very fortunately sat in the desk next to the chap who created the first ever algorithm in electronic markets, a chap called Dan Matheson in New York, and back in 1998. And very quickly, those algorithms, they're not that smart. You know, they are a piece of code that is repetitive. And in those early days, it was literally just trying to create a VWAP, a volume weighted average price for it. So it would actually just look at the market price, and it would just sort of split your order up to try and give you an average blended rate. So my history of algorithms was getting up until Goldman's. 2008, I left. Then it was getting, they were getting quite smart and very sophisticated in terms of understanding how to sort of game the other algorithms ahead of each other. Now, again, all those algorithms that I've ever worked on, they're all using traditional cables into the exchanges, into the cases in the data centers. So, you know, our job was to reduce the time it takes from the decision point of the code on the bare metal CPU that's running in the data center, which is actually plugged directly into the exchange CPU. That was my role. Now, this world of algorithmic trading, e-trading algorithms within blockchain is beyond me. I'm that dinosaur that got to the point where I understand how these banks use algorithms to trade and you know, generate alpha from being as fastest to the market and having the best sort of strategy. But maybe Eric, you know, with your guys on the Algorand, platform, you have some view on how the volatility would be compensated by the fact that you can process a lot more and a lot quicker.
I feel like I need the question to go back up.
Yeah. That's a great question, by the way. It's a great question. Yeah.
What are the opinion? E-trading algorithms, significant number of transactions executed per second algorithm.
So
I think it's a very interesting and a complicated area. I mean, I would say, look, like the traditional kind of what you were talking about, Jamie, where it's like, how long is a piece of wire between your computer and the exchange computer, which is deciding like who won the asset that was being sold. I think, that's all there. That's super complicated. Traditional exchange infrastructure, they put in the speed bumps and they tried to make it a bit more fair. In the blockchain lands, I mean, there's a ton of people who are doing things like, they run their own nodes and then they try and reorder the transactions so that you do front running and all kinds of things that would be illegal in a traditional market. And then there's a counter argument where they say, actually, no, but it's kind of fine because everybody can see that we're doing it and it's all transparent on the blockchain. So like, now we'll set up a pool. So anybody wants to join and put some assets into our front running pool can participate as well. And then supply demand will mean like there's all that kind of complicated stuff. I think part of the question was about speed and the fact that Algorand is a very fast, a super quick blockchain. I think you're still going to have, whether it's, whether you're waiting 10 minutes or 20 minutes on Ethereum for your trade to go through, or whether you're waiting 3 seconds on Algorand, I don't think that we can say, oh, well, there's, this type of behavior couldn't exist on Algorand because it's too fast, because like it already exists in exchanges where you're kind of splitting a fraction of a second.
And what about the gas fees? Because obviously I come mainly from the private, but do you think it's something that will sort of solve itself? Or is it always going to be hanging over like a bit of a dark cloud?
I think it's a supply demand thing because, I guess and this is more of sort of an Ethereum thing, but it's this idea that kind of, you pay a higher fee so your trade goes faster. And so you can obviously then implement super sophisticated algorithms to be like, okay, well, actually somebody's going to get that asset for a they're willing to pay $50 for it. So if I put enough gas into my trade, then I can buy it for $47 and sell it to them for $50. It's like that kind of thing. And then you're like, well, as long as I pay less than $3 in gas, then it's a cool trade. Let's do it. So I'm not sure that. I think that stuff is just sort of, it's all bubbling away right now, and there's all kinds of people making a living off these kind of MEV strategies and so on. I don't have like a super strong view. I think it's just definitely it's a feature of the DeFi ecosystem now.
I think what I would add is that it's almost impossible within the traditional finance infrastructure to calculate the cost of a transaction. And we tried to do this for years within investment banking. And Emma, I'm sure JP Morgan do the same thing. The cost of the trade is very difficult, the total cost of a transaction. So the fact that we are able to understand the cost of a transaction on a blockchain doesn't mean it's worse than the old financial infrastructure. It just means it's more transparent. And you can actually, as Eric described, you can bake it into your decision process for whether or not you do the transaction. But, when you're looking at, these large investment banks and their traditional sort of exchange gateways, there's so many costs that just are baked into the fact that you're just running an organization. And then at some point, a finance director has to go, a controller has to go, well, the cost of that team, that building, that desk, that HR person representing them, that, it's just endless. So you'll never really understand the cost within traditional finance, but within blockchain, it's very transparent.
Okay. For now, we don't have any other question in the chat. So maybe if you want to conclude with any remark, advice, view of the ecosystem, anything you wanted to add to the topic of tonight.
I guess my closing statement is just referring back to what Emma said earlier, is that this is a very nascent technology. It's a very new asset class. We are at the beginning, even though it's been around 10 years. 10 years is nothing within finance. So to think that what exists now is all you have the opportunity to get into is wrong. We don't know what's coming up. We don't know what the metaverse applications are going to be delivering, how they're going to be implemented, how they're going to be governed. There was an enormous amount of opportunity within blockchain, within finance, and I think that for all of you listening on this, at this stage of your career, it's just exciting, and it's just now. Don't be afraid to try something and then move on. As everyone says, fail, but fail quickly, and then move on to the next thing. These are normal, traditional sort of career development sort of guidance points, but they apply in the real world, but they're just applying it much faster.
Before concluding, we have another question that from one of the viewers. Do you think traditional assets such as options will get a tokenized equivalent, or will they remain in the traditional finance world?
I think they already are. You have exchange traded options, and I think I think to the extent that these things are brought on chain, particularly with, in my view, maybe not so much the trading of them, but the settlement and the reconciliation and the getting away from this kind of 10 people need to settle everything and be involved in the process, like that part of it, I think is totally possible.
Yeah, I think that you're absolutely right, Eric. This is already happening. We've had people approach us with the ETF, and this may sound nonsensical, but we have an exchange traded fund on a traditional market, but it has a underlying asset that's digital. Then somebody came to me and said, can we tokenize your exchange traded fund? And I'm sitting here going, well, but the fund is of a token. So you're tokenizing a traditional asset that holds tokens. And but the logic is there, because a traditional market is open for 8 hours. Bitcoin trades every second of every day, forever. So there is going to be a shift, and it is already starting, where you're going to have traditional funds, assets, bonds, instruments, that are then tokenized, traded on non-traditional markets, and of course, then the value of that will then be pegged back to when the traditional market opens. Then you're going to get that arbitrage opportunity, because whatever's traded out of hours is going to come back to what the on hours is. So it is definitely happening. Whether or not, if 30 years ago, if you said that there would be no pit sort of shout criers and shouters on the NASDAQ, people would say absolutely not. That's nonsense. But you never know. Maybe all electronic markets are going to become tokenized versions of it on non-traditional markets. But we're yet to see.
Great. Eric, Emma, sorry to have interrupted. Maybe you want to either complement this on tokenization of option or traditional assets in finance, or maybe just give you.
I just remembered there's something called Algorand Finance that was made by a team out of Singapore on Algorand that has some options available there, so calls and puts and that type of thing.
Yeah, thank you. I'm going to put it in the chat. Do you want to add anything to encourage or advise?
Oh, I'm sorry, I forgot.
Okay.
No, I would say, look, Patrick, you and I were talking about this before the show started, and it's always a wonderful thing in life if you can find something that you enjoy and you can make a career out of it at the same time. So I would always encourage that for everybody, whether they're interested in blockchains or finance or law or human anything. So that would be my advice. And generally, I find if you do enough of your own research and you talk to enough people, you'll generally find a good place for yourself.
And it's an exciting time. There's a lot to be done, and it's an exciting space.
Thank you very much. I think we have given a pretty good overview of what is this technology, what it can bring to finance, what are the possible career paths, what are the key differences people should expect. Thank you very much for your time. Thank you for your insights. and goodbye.
Merci beaucoup.
Very much.
Wow.
Take care.
Amazing. Thank you.
Oh, wow.